Welcome to today's feature presentation, Performance Measures for Trading Systems. What do we want to reach with this? We want to give you an indication or a guideline of how to evaluate the value or the performance of a trading system over another. With the never loss trading concepts and strategies, we focus on following institutional money moves with our algorithms. We are more than 10 years in business, focus on one-on-one training and coaching, and never loss trading is not a promise to never lose a trade. It is a concept to repair trades, but never stop loss trading was a bit lengthy. My name is Thomas Barman. I'm your presenter today, and I want to make you aware of the risk of trading and that I'm here as a trader and educator, not as a broker, dealer or financial advisor. For doing a performance measure of a trading system, we are using three different appraisal methods. One, return on investment, so how much return do you make on your capital invested through the system. Payback time, how long does it take you to recuperate your investment cost, and then value-based analysis, when you see what you trade for, how often you can do that, how does one perform over another, and we'll use that to appraise different systems. So we start with return on investment, ROI, and a very simple definition is return on investment is a performance measure. Definitely it tells you the percentage of return gain over the invested capital. Simple, yeah? Simple and easy. So ROI is profit divided by the investment per capital, but one thing is time and how often you can do that, and we'll come to this. Yeah, the ratio stands give or take for an interest, and in the past an interest of an investment was compared to the interest of a bank, but currently banks' interests are close to zero, so therefore that's not a good comparison. You need to find something, either a business or financial market investment, to make a solid and good return, and we'll give you a feedback of how to do so. The key to a performance measure of a system is the probability of that system producing you valued income opportunities. Yeah? So what most people have is what I replicated here with a little game in a bag of marbles, where there is 20 marbles, 9 are losing marbles in red and 11 are green marbles winning. Yeah, so you would think, okay, the probability is slightly in your way, so that's a way to make money. But I tell you, if you operate like this, most likely you will not. You'll need a high probability system, and that starts at the 65% probability, here replicated by 13 winning marbles in green and 7 in red, and only through that system you will have the opportunity to make long-term a good return on investment, have a payback on what you invested in your system, and be long-term positive or create an income from the financial markets. Let me guide you further. When you're using a 65% probability system, your likelihood that you reach 6 or more winners out of 10 draws is about 75%. Yeah, just remember this. Yeah, there's a Bernoulli experiment that was a Swiss mathematician that shows us the math behind this. However, if you use a 55% system, it's random. You only have a 50% chance to make 6 or more winners. That's the big difference. You need to come to high probability to have a chance. Unfortunately, most retail traders operate with a low probability system at 55% or below, and with that your chance is going to be minimal to come out positive. The question is, why do many retail traders operate with a low probability system? And I give you multiple answers. There's not only one. Most beginning traders go with a low budget system. They don't want to invest much, and they don't consider what they pay back to the market without knowing what to do, and that can outpass by far the investment cost of a meaningful system. Yeah? Only a couple of instances were evaluated, 3, 4, 5, 10, and based on that it's assumed it's going to work, but long term it might not. Yeah, trades are not decided by numbers, by emotions. Yes, this is good, that's where I go in, somebody calls it out for you and you follow without knowing what you do. If it works out for you, wonderful. But if you want to make consecutively money from the market, you better be using a system, because the frightening news is 76% of the retail traders are losing money, and we want you to not be part of those. Yeah. Others, after 3 losses or so, they hop to a new system because they take the next low budget system on with exaggerated expectation potentials. And last but not least, they take a gambling approach. Too much on one card, too much on one trading opportunity or in relation to what your holdings are, and with that everything that you have listed here contributes to the frightening news that we have 76% of the retail traders losing money, and we are documented on that. We can prove that based on the data of brokers. Let us now talk about payback period and value-based analysis. And we start out the payback period in a definition. It's the time it takes to recover from the cost of an investment. For example, in the industry, if you buy a new machine that produces value and you pay back your machine after 12 months, that's a good investment. It can be going much faster with the right trading system, can be very costly with the wrong one. Yeah, in layman terms, payback period is how long it reaches for you to be break even, so that all the money that you invested is coming back. Or value-based analysis, so we'll compare, and let us go into that. We compare what we trade for, how often we do that, and what the probability is for us of winning, and the opposite, the probability of losing. Let's do a little calculation together. We compare two systems here. With a probability of 69% of winning and 65% of winning, but also there is a difference in how many trades we have. Here we see 100 trades in the period that we observed, 50, and what we trade for. So how far a distance of a price move can we project, 150 to 100, and if we just calculate them all up, you see the one has a value of $10,350, the other of $3,250, so that means the one here, 69% more trades, further distance to trade for, has 3 times the value of the one which is still high probability but less trades and for a less price distance to trade for. That's important as a criteria to evaluate your trades with. Today I want to introduce a concept to you that's called timeless trading, because we take time out of the cohesion, and not to be abstract, we want to first look at what we strive for, infinite returns. I know it sounds a little exaggerated, but it's not. You'll see through the calculation of how that works. Yeah, imagine a trader that has $50,000 of investment capital. Out of those, invests 10,000 into a system that gives him 10% return on investment per month. Yeah, so 50,000 is what we need to recuperate, yeah, or want back to strive for infinite returns. If we have 0.1, that's 10% of 40,000 invested time X periods, and we solve that equation, we have, with a simple approach, 12.5 months for full payback. Yeah, so then we recuperate all the 50,000, so we have 50,000 additional capital, or 8.5 months, which we consider compounded interest. So how does it calculate? I put a little scheme up there that you see when you make in the first month a 4,000 return and you consecutively always do the same straightforward. It takes 12.5 months to be at 50,000. If you take a dynamic approach that you reinvest what you also made, then you take 8.5 months to be at a 50,000, and then you got all your capital back, and from there you can strive for infinite returns from your investments. Applying those performance measures, we take 2 of our systems. Yeah, we take our introductory system, Trade Colors, which is an algorithmic system at around 65% probability of predicting the price move of the underlying into the future, and we'll take never loss trading, trend catching, and we compare both of those on a timeless trading concept. What we want to reach through our timeless concept is reducing the number of decisions that you need to make as a retail trader to a minimum, because we let the chart tell when to buy or sell. Let's go into the details. What you see here is a chart for tradecolors.com, and we have multiple trading opportunities framed here in orange. Yeah? And some were winning, some were losing. We'll go through the details, but the orange squares have the setup. So 2 of a kind, 2 of the same color. Next candle takes out the high here on the blue color frame, and then we'll trade for what's up here for an approximated price move here of 18 cents. The chart shows crude oil futures. It works for all asset classes, but I take 2 examples of futures contracts because a lot of the retail traders like to have those on board for their daily trading. Yeah. So again, that's how we go through that, and then we'll appraise in see how many winners, how many losers do we have, and then compare it to a higher value system, never loss trading, trend catching, and see how that performed. But before we do so, we add up the numbers. Yeah, we had 3 winning trades, 75%. That was a lot. We had 1 loss. In total, a profit of $290 per contract was achieved. Yeah, so adding up the details, and the observed time frame was 3 days. So this would contribute relatively quickly to a full payback of the system cost, and the education and the knowledge is going to stay with you forever, because we only have a one-time payment. We have no continuation payments. If the system is in your possession, you have it for a lifetime. Here's the same period compared for crude oil with never loss trading trend catching. Yeah, and you see here we trade for a further out target. Yeah, the prior one was 18 cents, here's 24 cents, and that's the big thing. Instead of trading for time-wise orientation, we trade here for a certain price distance, and with that we are very unique. So it's not easy predictable where our entries and stops are in comparison to when you trade on a time-based chart, where it's pretty obvious. And you might have had that situation where you got stopped and then the price continued in your direction because you are predictable. So one thing you see immediately on a chart, there's plenty of more opportunities up there compared to the other. So the other is high probability, this will be too, but let's compare it by numbers, because that's what we wanted to do together, a performance measure comparing numbers. And here we had 8 winning trades, even 80%, 2 losing trades. A total profit of $1,400 per contract was achieved in the same observed time frame. So now you see already, okay, the two things performed both on high probability, but one had more trades, more distance. So what does that mean to the value of them? Let us now talk about payback and ROI, return on investment, for both of those systems. Yeah, when we now consider the investment on our published system prices that are online, yeah, on a 3-day performance. So you see the first one, Trade Colors, had $2,647 of an investment. Yeah, that's what the system cost is, including many hours of individual training. So it takes 9.13 day periods based on that calculation to pay back on the investment. On the other hand, trend catching, which is priced at $6,997, had a $1,400 production, or takes 5 3-day periods as we showed them to have a payback. So with that you have an idea, okay, one is close to bringing you half the investment return compared to the other by trading just one contract of crude oil. The timeless tick, what we set the charts on, is based on a calculator or an algorithm that you only have if you subscribe to the system, and so therefore it changes over time. So it's not always the same. What you see here is the same period, but we have the ES, the E-mini S&P 500 futures contract, and we're going to compare the two systems in what you trade for. Here it's 7.5 point at the time of recording, and you see multiple opportunities where you see, okay, winning trades. Here for example was a buy threshold, buy 3,904.8, it's a 7.5, it's just rounded up, and there you see the little dot on the chart. This is where you take profits. Were they losing trades too? Absolutely, but you see the pattern repeats itself, and here we have multiple bites along with the price move, always compared to a meaningful target and the stops on the chart, and is considered for you, and there's a relation between risk and reward. All of that you'll know immediately at every entry, and you can work with a buy stop, or here in that case a sell stop order. Yeah, that would have been a buy stop order, because we will only go and enter into a trade if the spelled out price threshold is surpassed in the price move of the next candle, and immediately we know also our exit, yeah, where the dot is. Yeah, there we exit the trade, and we'll move multiple times with a developing price move to the up or to the downside. So here in summary, what did we have? We had 9 winning trades in that period of 3 days, each for 7.5 points. We had 1 loss, and we had a total gain of 59 points, or $2,962.50 per contract traded. This chart is now showing you the same time period compared for the ES, the E-mini S&P 500 futures contract, and you see 5 winning trades, 2 losing trades here in that frame. Here, 2 of a kind, 2 blue, and then we trade here for 4.4 points, so we trade for a little less distance, and we trade less frequency. Yeah, less frequent, less distance, but still on a high probability system. Most likely you will operate on a small or smaller distance with a lower probability system, and then return cannot be calculated because most likely it'll not be produced, because 76% of the retail traders, unfortunately, in particular within focusing on shorter term trading, are losing money, so paying the market instead of paying for knowledge. Timeless trading is only one part of what you learn in our mentorships, regardless if you go with trade colors or trend catching or top line. It lets you participate as a short-term trader multiple times in an evolving trend or in an evolving momentum price move for any of the underlying securities. I just took two examples here. The goal is to strive for constant income, winning more than losing, and winning frequently within the price moves. And if trading or investing was easy, nobody would ever go to work. However, it is learnable, and that's what we offer here to you, where the timeless trading is only one facet or one part of what we teach, because we work with you on trade repairs, money management, a business plan where you know when to trade, how to trade, what returns to strive for, how often to produce an income from trading, doing that in all your accounts, 401k, IRA, day trading account. We show you risk limiting strategies, how to find those trades through our alerts or through own scanners, and where are the price move indications. That's what I showed you on the chart. That all is in one package, regardless with the trade colors or with the never loss trading. Trend catching that I introduced here, trend catching has just more hours, more precision, further out target to trade for. With trade colors, you're still on a high probability system outside the reach of a 55% system that you most likely have today. If that's interesting for you, then don't hesitate. Schedule a personal consulting hour with us. We see what suits you best. And in the mentorship program, we tune everything to your individual wants and needs. We also work weekends, and we work at your best available days and times to help you to transform you into the trader you want to be with high probability systems. We are looking forward to hearing back from you. Thank you very much for your attention.